Welcome to the B.F. Anderson Techno Fundamental Report for December the 26th. There is a time to go long, there's a time to go short, and there's a time to go fishing. Sometimes when the market is just not acting right, maybe it'd be best just not to watch your portfolio for a little while. Maybe just go do some fishing. Anyway, Jesse Livermore loved to fish, big fisherman, and he would always go for trophy fish. As you can see in this old picture here, he had a yacht off of Palm Beach. But his point was about fishing, and the stock market analogy is that you want to get 10 lines in the water, or you want to have 10 stocks in your portfolio if you can find them. And you want to go for the gypsy fish, which is the big trophy fish that they would catch in the Atlantic. Very rare to catch a gypsy fish, but you had to have 10 lines in the water, like 10 stocks. Now, Peter Lynch talks about 10 baggers. That's the real trick. If we can find companies that will appreciate in value over 10 times, that will really make a difference in your financial life. It's kind of a once-in-a-lifetime thing. We've done it in the past, and we really enjoy it when it happens. But Peter Lynch's biggest 10-bagger was Walmart. He used to drive around the Walmart stores and count the cars. But the main point he made about investing in 10 baggers was that if you can find a company that sells products and services to the masses, it means that it's kind of incalculable, because let's just say you're selling hospital beds to hospitals. Well, there's only so many hospitals, and there's only so many hospital beds you can sell. But whereas you get into a masses retail type thing like Walmart, you can see where it becomes incalculable. So it's a question of quality versus quantity. You don't want to have a 50 stock portfolio. You just can't keep up with it. So stick with 10 quality companies. Now, I wanted to mention the SOM rule. This is an indicator for recession. You might want to pause your video player here and study it a little bit. But Claudia Sahm is an economist with the Federal Reserve. Now, she's no longer at the Federal Reserve, but she developed this indicator that has reliably predicted recessions since 1960. So you can see here, once you break out above zero here, and if you read about it, it's a kind of a complicated formula, but the SOM rule has been activated because unemployment rates are not going in the right direction. I mean, we had a 4.3% rate in July. That's what triggered the rule. And we really haven't seen a whole lot of improvement. So as interest rates go higher, the risk of recession becomes greater. So I wanted to go over the indexes real quick. This is just to show you how we're not seeing a real positive environment across the board. We're basically seeing a positive environment in the NASDAQ here. You can see here, as the rule of the power trend is, as long as the 21-day is above the 50-day, the power trend on the NASDAQ continues to stay in place. But if we go to the mid-cap stocks, you can see here where the power trend is crossing that 50-day. So the power trend is turning off on the mid-cap stocks. It's just the NASDAQ and the S&P that are continuing to be the large-cap stocks, basically. So here we have the New York Stock Exchange. You see the same problem. Here we have the small caps. So we're seeing a divergence here between the large caps and the small caps and the mid caps and the New York Stock Exchange. But then if we look at the S&P 500, you can see, like the NASDAQ, it's continuing to hold in a power trend. The value line geometric, a 1,700 stock index, equally weighted. It's losing its power trend. Here we have the equally weighted S&P. So when you go from market cap related indexes, and don't look at the Dow Jones. It's only 30 industrial cyclical companies. It's not going to give you a true picture. It's something everybody watches those, so you may want to keep an eye on it. But the equally weighted indexes, you can see the power trend has terminated. And I think the culprit here is interest rates. I mean, we're seeing the 5-year Treasury moving up. We've got the power index moving back above zero, which is just not a good sign. It's not helping anything. Just wanted to look at a couple of stocks here real quick. As you can see here, trend meter's positive on Astera Labs. The trend is very positive, holding these moving averages, which is the 10, the 21-day, and the 50-day. And we're getting buying volume coming in here, and the relative strength is in a positive mode. So this stock looks interesting. We own the stock, by the way. GE Vernova is another one we own, and the problem we've got here is going sideways, but the trading has been very tight, which tells me that the buyers and sellers are basically at parity with each other. This company has big potential. You know, it was a spinoff of General Electric. They broke the company up into three parts. One was healthcare, one was power, the power industry right here, and the other one I can't even remember. I'm sorry, but anyway, I'll look it up. But you can see here that this particular pattern is pretty positive, and the volume pattern is positive. We've got good relative strength, and the trend meter says it's in an uptrend. But they're very involved in SMRs, these small modular reactors, which is a new breakthrough technology for nuclear power. So keep an eye on GE Vernova. It could be a big winner. We'll just have to see. Let me know if you have any questions. Thank you very much.